This year, a big year particularly for the US market. What are US Treasuries and how can you make them work for you? Welcome to Investing Explained, where we make your money work harder for you. US Treasuries are government debt securities issued by the US Department of the Treasury on behalf of the federal government and are commonly considered to be low credit risk investment instruments. How it works? To put it simply, investors lend money to the US government and in return, they will receive a repayment of principal plus interest at maturity. Do you consider yourself more on the conservative side when it comes to investing? What if you're looking for some stable income while diversifying your current assets to balance risks and returns? How then can you grasp potential opportunities with US Treasuries on the moomoo app? We'll show you. Hear directly from our trading representative. Take it away, Juncheong.
Let's do this, Olivia. That's the first question that's probably on every investor's mind, which is what does a total return on US Treasury consist of? Two parts, interest income and capital gains. Open your moomoo app and follow through with me. Select Wealth, Bonds, US Treasuries. Over here, you can see the full list of US Treasuries available for trading currently, which stands at over 20. More to be added, so stay tuned. This US Treasury list here are traded over the counter on the secondary market and available for all retail clients with a minimum amount of $1,000.
Due to the current market context, you might ask, why is the popularity of the US Treasury surge at an all-time high? Three possible drivers. First, higher yield. To start off, we can look at the Singapore government bond yields. The data here reflects big rates quoted by SGS primary dealers to each other based on the standard market lot transactions as specified in the rules and market practices of the SGS market. The bond prices quoted here in SGD exclude any applicable accrued interest. Now, based on historical data, when the Fed announces a rate cut, the coupon interest rates of newly issued Treasury securities typically decrease, a possible key opportunity for investors that they may want to consider. Now that's locking in more than 5% stable yield with the US Treasury without the worries of the interest rates dropping in the future. Now with these possible effects on price and yield, such instruments make it relatively and possibly safer as an investment option. Now Juncheong, what about buying US Treasuries?
Great question. Like mentioned previously, investors who purchase bonds receive fixed interest payments as guaranteed by the issuer of the bond. Now, bonds as financial assets also experience price fluctuations. So as an investor, it is important to note that the price of US Treasuries fluctuates daily with market risk. You may track all of these movements at your fingertips. Let's head back into your moomoo app. Select the bond you want to trade in a bond list, or simply go to search. Once you have chosen it, tap the Buy button on the Bond Details page. Enter the nominal value and the buying price you desire. You can also refer to the indicative ask price when making your decision. Once decided, tap the Buy button. Enter your transaction password and submit your order. Fast and straightforward. All the tools are here to ensure you can execute your trades seamlessly.
Now Juncheong, when can an investor consider buying US Treasuries? Also, how can they sell their bonds on the app?
Of course, Olivia, investors may choose to buy US Treasuries with a higher yield to maturity and hold them to maturity to earn a low-risk, stable return. To sell, in your moomoo app, tap Bonds in the position list of your account. Here, you can access the Bonds Position Details page. Select the bond you want to sell. Tap Sell. Here, you have to enter the nominal value and the selling price you desire. You can also refer to the indicative bid price. Once ready, tap the Sell button, enter your password, and submit the order.
Great explanation, Juncheong. What are some risks then to consider when investing in this space? How can they turn it into a possible opportunity?
Some risks to consider are related to credit, market, currency, and of course, inflation risk. To provide some background context, US Treasury bonds have been issued since the Civil War and have shown resilience in some respect, having no instances of default in the strictest sense. In this respect, investors should keep an eye on the US fiscal deficits and its debt affordability, particularly in the current context of higher for longer interest rates. From the perspective of asset value volatility, the risk is not negligible. At the end of last year, we witnessed one of the largest and longest drawdowns in the history of US Treasuries, with a decline approaching 20%. So in a period where interest rates are climbing, investors might incur a loss on the capital gains of the bonds unless they hold them to maturity. There are always ways to navigate these potential uncertain scenarios. What's important is to diligently track the market activities on the app, as well as the performance of various US Treasuries you are invested in.
Very important. Now, can you quickly summarize what are some indicators investors can take note of and prioritize as a tool within this space so they can keep track of updates or potential risks?
On your moomoo app, pick a bond you like to track. You can refer to these indicators to apply what you learned in this episode. The coupon rate, bond type, maturity date, yield to maturity, which shows the total return anticipated on a bond if the bond is held until it matures. Accrued interest, which is done on a daily basis and reset after a coupon payment is made. Par value, which is also known as face value, the amount of money that the issuer of the bond promises to pay back to the bondholder at the maturity date of the bond, and the issuer, issue size, and country of issuer. All these tools and indicators to take note of and accessible at any time. Certainly utilize it to be part of the US Treasury space for your investment needs. Back to you, Olivia.
Perfect, Juncheong. Now, if you're watching and you like to make quick calculations to estimate the return from holding a particular Treasury bond until it matures, here's a tool just for you. On this simple calculator, you can clearly see the coupon income and potential capital gains you'll get from the bond investment during the entire holding period. We're dropping the link right in the description box for you to access it. Learn to invest smarter by taking charge of these US Treasury opportunities right now. You can also keep track of any ongoing US Treasury promotions in the link down below. We care for your financial well-being, so follow us. For more videos like these, remember to like and subscribe. Let's get to work, everyone. Have a profitable day.